very good morning to all our viewers. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, you know that this is the show where you get all your stock-related queries answered by the experts. So do get ready for that. But before coming to that, let's look at what the markets are up to. So Cheryl, once again a weak start for the markets, but what's interesting to see is that in the past 30 minutes, great recovery coming in for the markets, at least for the Bank Nifty, we can see that.
Absolutely, Shrishti, weekday coming in, a lot of global cues, a lot of global news over the weekend. Also this morning, it just seems to be pouring in non-stop. But like you can see on your screen, the markets are recovering a tad bit. At one point in time, we were down almost 1.2% or so for the benchmark indices. Right now, we are down about 0.8% when it comes to the Nifty, below the 17,000 mark as well. We have slipped below the 16,900 mark as well earlier on in the day. Talking about what the rest of the markets are doing, and like Shrishti also pointed out that Nifty Bank has seen a recovery. Right now, it is actually outperforming the benchmark indices, 0.6% downtick, however, coming in for the Nifty Bank. What is key to note that yes, the advanced declines ratio right now is in the favor of the declines. So the market breadth is definitely weak. Talking about the list of gainers, because in this weak market you only have 6 stocks that are gaining on the Nifty. That's BPCL, Dr. Reddy's, Divi's Labs, ONGC, HUL. Right now you also have Kotak Mahindra Bank that has seen a stellar recovery. It is in the positive territory as we speak. Talking about the Nifty losers then, and losers being is Adani Enterprises, 3.5% downtick coming for Adani Enterprises. Bajaj Twins also under immense pressure. Bajaj Finserv losing out more, 3.5% downtick for that one as well. Hindalco, Tata Motors, HDFC Life are the other set of losers in today's trading session. So yes, definitely a weak market is what we are staring at. Hopefully, we've just begun trading, so we should try and see some sort of a recovery through the course of the day, Shrishti.
Okay, so that's what the markets are up to. For Cheryl, today let's move on and talk about the buy now, sell now topic today. And today we're going to be focusing on the specialty chemical space, and in that we'll be zooming in to Navin Fluorine. This particular stock is in focus as this company plans to add 2x of its existing hydrofluoric acid capacity at its Dahej plant. It's a raw material for the company and is a key building material that is used in fluorination. My colleague Sharad is here to give us more details on this. Take it away, Sharad.
Well, yes, in focus we'll have Navin Fluorine, where it will be actually doubling its raw material capacity for hydrofluoric acid at its Dahej plant. Now, this hydrofluoric acid is an important raw material component, and this is a primary building block for fluorination, where it's one of the largest revenue segment for the company. Now, apart from this, almost the brokerages have also given a thumbs up, stating that the company is walking the talk when it comes to its growth plans. A total capex outflow of 450 crores would be there, and the important thing is this would put an incremental capacity of almost 40,000 million tons per annum. Currently, the number is at 20,000 million tons per annum, which is being used on an internal basis. Now, of course, how the capex will be done, the important thing is that it will be done via its wholly owned arm, and both internal accruals as well as debt would be there to fund this capex. Now, apart from this capex itself, let's look at what are the important future triggers coming in as stated in company's recent con call, and they have stated that the demand headwinds would be there in the second half of this calendar year. This is coming in from the refrigerant demand coming from the US markets, and also the specialty chemical segment demand is also expected to be impacted because of elevated inventories in the Brazilian market. But there is a sliver of hope, and they have stated that the margins are expected to go on a higher side because the products which are there would be a change in the product mix, and that will actually increase the contribution to the revenues. As per the analyst community, as per Bloomberg, 70% of analysts out of total 27 of them tracking have still a buy rating in the company with a target price of 4,766 rupees per share.
All right, thank you so much for that, Sharad, for getting us the latest what's happening with Navin Fluorine, and that puts the spotlight on the entire specialty chemical space. So let's bring on board our guests for today. We have Kunal Bothra as well as Shahina Muqaddam joining us on the show. Very good morning to you, Kunal, as well as Shahina. Thank you so much for joining us on ET Now. And yes, markets are definitely weak, but one of the sectors that has been beaten down quite a lot has been specialty chemicals. You know, Shahina, it was one of the bright spot. It was a rare jewels at one point in time. I think during the COVID era also, a lot of interest started coming in this specialty chemical space. Then we saw this one correct quite a bit. Do you think now is a time that you can relook at the space, a good buying opportunity coming in on some of these specialty chemicals names?
If you see the last 6 months, most of the specialty chemical stocks have corrected by almost 50%. Currently, what I believe is that this sector has again come back into the radar of investors. But still, I would say that given the market volatility, I would still believe these stocks are consolidating and remain buy on dips. Of course, some are interesting. One can start looking at and start dipping into, like, for example, your analyst just spoke about Naveen Fluorochemicals. So these are mid caps like Avanti Organics. These are mid caps that look interesting, started looking interesting. One can start dipping in, but I would say that take your time and buy it over a period of time, accumulate over a period of time. Basically, what we saw was in the last couple of months, while the stocks have corrected a lot, this was more in response to the tailwinds that this overall sector faced. We had raw material prices that had gone up. There were issues with logistics. So these had affected I would say, performance of the companies, especially the non-specialty chemical companies, the ones that were in core chemicals, the base chemicals. But specialty chemical stocks managed to maintain their margins as well as their profitability, and they have done reasonably well. So after the correction, which was actually because of high valuations, they have started looking at stocks. They started looking like stocks one can start dipping into. I think some of the other small caps also look interesting. Like for example, you have Balaji Amines, you have Nosil. These are companies which are actually targeting the export market where there is limited competition, especially given that Europe is facing issues with higher costs. So the sector has started becoming interesting. Investors can start looking at it and buying in at dips.
Okay, so buy on dips, that's the strategy that you should follow when it comes to the specialty chemical space. But Kunal, coming to you, we have a lot of options in the specialty chemical space, like Shahina was also pointing out some. Any particular counter that is on your radar, and what's your outlook on Naveen Fluorine? Would you agree, or would you rather go with the same view, a buy on dip strategy on all these names, and any favorite from that?
Yeah, good morning to all of you. My sense is that it's always better to buy on breakouts rather than buying on dips in this kind of a market, because I think the charts, for example, for Naveen Fluorine, the stock has been trading sideways over the last 1.5 to 2 months, and the breakout point for Naveen Fluorine is around 4,400 mark. The charts, which I've outlined, for example, SRF, the stock has also been taking consistent resistance at the 2,350 mark. In fact, over the last 1 month, the stock has been 1.5 to 2 months. The stock has been trying to break past about the 2350 mark, but it's unable to do so. So it's always better that even if the stock is going through a patch of consolidation, to wait for confirmation of a breakout, because that will probably determine that the trend has changed and reversed for stock. So I think for the specialty chemicals basket as such, as well as the likes of Naveen Fluorine, SRF and many other names, I would wait out for a breakout above the previous swing highs, and that's where I think one should initiate a buy.
All right, so that's the take coming in from both of our experts when it comes to the specialty chemical space. And on the bottom of your screen, as you can see, that's the recovery coming in on Nifty Bank, 0.7% off the day's lowest point. But on that note, we slip into a break on this edition of Buy Now, Sell Now. We will come back with all of your stock-related queries. Remember, viewers, we are not live on YouTube, but you can connect to us on WhatsApp and other social media platforms. But for now, we're slipping into a break. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. You can connect to us on Twitter as well as Facebook. We are live on those platforms. Also, you can write to us on the WhatsApp number that's flashing on the top of your screen. Do mention your name, even if you've been writing to us every day on WhatsApp. Do mention your name. Also, the stock name that you're looking to invest in. If you've already invested in the stock, do mention the buy price as well as the quantity, and also the time horizon that you're looking to stay invested in a particular counter. That will help our experts actually help you better. But before we get on with all the stock related queries, Shahina, let me come first to you and let's talk about what's happening with the markets. Volatile moves, most of them actually because of what is happening globally as well. But back home, what should retail investors do to make sure that their wealth is protected?
I think one needs to be cautious at current levels because, as you also mentioned, I also believe that the market is volatile. It's reflecting not only the domestic issues, but a lot of global issues, interest rates moving up, inflation remaining high, crude oil prices remaining, stable but high. And while China is picking up, this could create further pressure in terms of price of various commodities. So to that extent, I think the overall sentiment remains quite uncertain as to the direction of the market. We could, in my view, see a bit of correction from here on. So I think over the next couple of months, investors need to be cautious. Invest in well-managed, large-cap companies with a medium to long-term view, and please do not leverage.
So that's the advice coming in for all our retail investors. But let's move on and kickstart taking all your stock related queries. And the first question that I have, Kunal, is coming from Bharat. And he wants your view on Cipla. He bought this particular counter at a price of 880 rupees last week. So going ahead, what could be the probable targets for this one?
Yeah, so Cipla was one of the recommendations which I had flagged off, I think, a week or so back at the 880 odd mark approximately. The stock had a rally towards, I think, 895, 900, and then it's now back towards 875. I would still believe that it's going through a time-wise correction. Pharma stocks are actually looking quite attractive over the last couple of days. Most of the pharma stocks are making a comeback, whether it's the likes of Glenmark, Zydus Life, large cap names like Dr. Reddy, etc. So I believe that possibly even Cipla can get into a recovery phase, but then don't expect too much of a bigger recovery in the stock price. Even the last time when I recommended, my targets were just about 904, 905 for Cipla. So I would not expect a major recovery. It's just that stock is going through a time-wise correction, and I would probably expect 904, 905 as an immediate target. So that's what you should be aiming out for Cipla.
All right, this one is coming in from Vivek, and Vivek wants to know whether it makes sense to book profit in Minda Corporation and look to re-enter at lower levels. Shahina, his buy price is about 100 rupees per share. Do you think this strategy will make sense, because the stock right now is trading around 196 odd rupees?
Well, I think he can, if he's a short-term investor, he can book his profits currently. But if he's longer-term, I think he can continue holding. I see better targets from here. I would say almost about 215 type of levels. So he can continue to hold. He can keep a stop loss of about 190 if he's looking at the shorter term.
Moving on to the next one, and Kunal, metal counters have been quite volatile recently, and the question is on Sharp Metallics from Ravi. He's holding 1,000 shares of Sharp Metallics from a price of 291, but he wants a long-term view on this particular counter.
Well, I would believe that it makes sense to exit the stock. I think trading at 275, 276 approximately. The stock has been going through a sharp correction. If I'm not wrong, over the recent high was in the month of January, where the stock was at 330 levels, and it's already corrected almost 18 to 20% at current juncture. So it's a stock which has been showing weakness in the charts even in the last 1 or 2 weeks, as well as over the last 1 or 2 months. And I believe makes good sense to look to exit the stock. You can wait out for maybe some sort of rally to come by, like what I think what happened on Friday, where the stock jumped up from 264 to 280 approximately. I believe if you get another maybe 20-30 points rally for the stock, say over the next 1 or 2 weeks, that's a good point where you should look to exit.
All right, this one is coming in from Naveen. He's writing to us from Bangalore, and he's holding SBI card as well as UTI AMC since the IPO times. What should he do right now, Shahina? Should he look to exit both of these counters or continue to hold on to both of them?
I think this segment is looking a bit weak. So in my view, he can exit actually both these counters and look at more stronger large cap banks like maybe ICICI Bank or even SBI Direct.
Okay, moving on to the next question. Shahina, once again coming to you. Prem Chandra is holding 165 shares of TTML from a price of 65 rupees. A lot of investors have been stuck in this particular counter. What's your view, and what should he do next? Should he exit this counter, or any hopes on recovery for this one?
Well, I think he can continue holding. The stock has corrected such a lot from the highs that it was a couple of quarters back that he can continue holding. I think a lot is happening in the Tata group, wherein there could be some bit of consolidation. So I will give a hold.
Right. This one is coming from Avinash, and he's asking about Balaji Amines. Shahina, he wants, however, he wants both the technical as well as the fundamental analysis on this one. Let me take this one to you. The stock is now hovering around its 52-week low levels. Do you think that it's reached a a kind of a band where it's attractive to look to invest in. He also wants to know how the fundamentals looking for this one.
Well, the fundamentals are pretty strong actually because it is in a unique space where it is one of the only few companies manufacturing globally. It's specialty chemical, so there is a good demand that has come up. So I would give it a long-term hold, but as I said earlier, it's better to buy it on dips. I would prefer buying it closer to the maybe 1,800 type of levels, and then he can see a target of about 2,200, 2,300. So I think it's better to buy it at lower levels, but it's a good stock.
Shahina, once again coming to you, Arvind Reddy is looking for an advice on a small cap company which has a low liquidity named Tarmat. He wants a long-term view on this one. Do you track this one?
Yeah, as you said, the stock, I don't really track it, but the stock has gone up substantially in the last couple of months. So, one can hold it because at least technically it's looking good. So it would be a hold.
This one is coming from one of our viewer who has not mentioned his name. I believe it's Hari Prasad, as I can see it on the WhatsApp screen. But please do mention all your names when you're writing a query to us. He wants to know about BPCL. And he's saying, what about BPCL today? Is it going down? Kunal, I'm not quite sure what exactly he wants to know about BPCL. Today, however, the stock is rising. Also, you've seen what is happening with the crude prices globally as well. That decline also could augur well for BPCL. But technically, what's the outlook looking for BPCL going ahead?
Yeah, in fact, it's a stock which is rising. So I think over the last 1 week, the stock has risen from 320 to 355. Maybe another couple of days of rally and the stock may go into a mild price correction. So I'm not sure what time frame you're looking out for, but then I would believe that possibly the stock may get into a rally first and then a consolidation as well as a mild correction. But that could be a good opportunity to try and buy the stock. So if you're already invested into the stock, for example, then I think maybe 360 could be a good level where you may look to book out some profits on BPCL 360, 365 zone. And then if the stock comes back, say at 340, 345 mark, that's a good range to buy back again.
Okay, that's the view on BPCL. But Shahina, coming to you for next one, Mahindran is looking for a view on RSWM. Is this a counter that he can add at current market price in his portfolio, and do we track this one?
No, I think you should wait. It's basically in the textile segment. I think you should wait. If you would like to buy it, you should buy it at much lower levels. As of now, I would not be investing in the stock.
From Balaji is writing to us from Chennai, Kunal. He wants to know, out of the banking names that he's mentioned, which one should he look to buy currently? Bank of Baroda, Federal Bank, or IDFC First Bank?
Well, I think Bank of Baroda, IDFC First Bank, as well as Federal Bank, all of them are classical enough. I think these stocks have shown some very good chart structures over the last many months. It's just that maybe from a short-term play, most of these stocks could get into a mild correction. So I'm not sure what time frame you're looking out for, what percentage gains you're looking out for, and whether you want to build a stronger portfolio in the mid-cap, private sector, mid-cap banking names in that regards. But then I would believe that all three names are very strong, very durable. I would suggest that make a basket of three of them rather than just picking out one of the stock, because all three of them have different characteristics for themselves. So a buy on dips is what I would recommend for these names. But again, the time frame has to be at least medium to long term.
Okay, moving on, Shahina, Jay Krishnan is looking for a view in Tube Investment. He's holding these shares from a price of 2,700 rupees, currently at a loss, but he's looking for a medium-term outlook in this particular counter.
Well, it's a decent large cap, especially with the change in management. Things are looking up for the stock. So if it looks good for the longer term investor, and definitely one can hold it if you're invested already into the stock, and you can easily see targets of 2,900, 3,000 over a medium to longer term.
This is from Anjali. She's writing to us from Chandigarh, and she has 85 shares of Reliance purchased at 2460 rupees per share. She wants to know whether she can add some more at current levels. Along with that, she also has Motilal Oswal 200 shares at 710. So she wants to know what to do with that.
See, ideally, we would have said that Reliance is of course a strong buy, but then just on the pure short-term charts, the stock has broken below a major support. So we were earlier flagging of that 2250, 2300 is a major support base for Reliance Industries. The stock apparently has broken that support. So it is always better to buy the stock on the way up. Because if the distance is just 3-4-5% away, then it always makes sense to wait out for a confirmation. So 20 to 50 and above is where I would recommend that you should look to buy. That will be just 2-2.5% from current levels. So it's always better to wait out on confirmation of a breakout. for Reliance Industries, at least in this kind of a market scenario. So I would recommend that you should look to buy about 2250 mark only.
Okay, Shaina, the next query is for you. Meenakshi is looking for an outlook on Make Money Organics. Is that a buy at current market price?
I'm sorry, I don't have a view.
Make Money Organics from the specialty
No,
chemical space. Do you
no, I
track?
don't have a.
Okay, she doesn't have a view on this. Kunal, would you be able to advise her on this?
Yeah, I think it's a good time to take out profits over here for Make Money. If you're looking to buy, I would suggest an avoid. If you're already having, then I would believe that it's a good time to exit. The only reason for that is from the March highs for Make Money, when the stock was almost at 120 levels. Every subsequent high the stock has made, the stock has apparently formed a lower top, lower high, bottom on pattern on RSI, and that I believe is a sign of divergence. So it makes a lot of sense to look to exit the stock.
Okay, Kunal, or no, Shahina, this one is for you. This one is coming from Vino. He's writing to us from Chennai, and he's saying that he's invested in Solar Industries, about 25 shares at the price of 3,700 rupees per share, and Apar Industries as well, 25 shares at a price of around 2,200 rupees per share. He is a long-term investor, so he wants to know whether it's are these named good bets in their sector, or should he look to shift to some other sectors altogether?
Well, I think the defense sector is doing pretty well, and solar also has done pretty well in the last couple of, I would say, quarters. He can continue holding on to the stock. I don't see too much of an issue. I would see that the stock can give you levels closer to 4,200 levels in maybe a medium term, so you can continue holding. And the second one was
2,200 was the buy price.
which was the second stock?
Apar Industries. Apar Industries,
Apar Industries
APAR.
also, yeah, Apar Industries also looks like a decent stock to hold for the medium to longer term. And there also he can see targets of about 2,450 in the medium to longer term. He can hold.
Okay, but with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back and we'll be taking more of your stock-related queries, so stay tuned. Welcome back to Buy Now, Sell Now, a show where you get all your stock-related queries answered by the experts. So let's get back again to taking all your stock-related queries. And Kunal, the next question is coming from Ram, and he's looking for your view on two counters. Firstly is Redington, and the other one is Grindwell Norton. Any of these name you feel is a good buy at this point in time?
Redington seems to be a good buy. I think the stock has almost reversed back towards its 200 DMA. 155.60 is a good support zone for the stock, where it retraces about the 200 moving average, as well as completes a mean reversion in terms of prices. So that's a stock which I would recommend out of the names which you mentioned. Grindwell Norton, the stock has broken below support of 1850 mark, which was the previous swing low the stock had made in the month of December 2022, and it's trading below those levels. So if you're looking to buy Grindwell, then I think above 1850 levels is where you can look to buy.
All right, this one is coming from Sandeep. He's writing to us from Punjab. He has TN Petro, about 500 shares at a price of 89 rupees per share. How are the prospects for this one looking like, Shahina, to you?
Well, I think to an extent, the stock is corrected a lot, and basically it is because of higher raw material prices. I would exit.
Okay, moving on, and Shahina, coming to you for the next one. Vishaka from Kolkata is holding two counters, 100 shares of KEI Industries at a price of 810 and 100 shares of Apollo Microsystems from a price of 224. In both these counters, sitting at a profit, wants to know, is this a good time to book profits or rather hold for the next 3 to 5 years? What will be your advice?
I think I'll not comment on either.
Okay. Kunal, any view on both of these counters?
You mentioned KEI as well as?
KEI as well as Apollo Microsystems.
So Apollo Microsystems is something which I don't track, so I'll skip that. KEI Industries, yes, I think you can look to buy. It's been doing fabulously well over the last many years. The stock was almost at 200, 300, few years back. It's climbed up to 1500 plus levels. Even currently, for example, the last 4 or 5 months of charts, the stock had formed a base at 1400 levels, moved up to 1700, and now it's consolidating at the 1600 mark. So the 1700, 1600 is a good range for KEI Industries. And the best part is the longer term trends, which are still very strong. for the stock price. So I would believe that it's a good zone where you can look to start buying KEI Industries, even if you're a short-term investor.
Okay, this one is coming from Hemant and he has 185 shares of Morpin Labs purchased at 31.5 rupees per share, 175 shares of Trident at 38 rupees per share. He wants to know the fundamentals of both these counters. Shahina, I'm unsure if you even track Morpin Labs, but Trident, how does this look to you?
Well, Moroccan, I would exit. It's in the pharmaceutical space, bulk chemicals. I think there is a lot of pressure over there, so I would exit. As far as Trident goes, it's a mid-cap stock, a decent stock in textiles and apparels. But here also, I would actually not invest in currently. If I'm holding, then maybe for the longer term, it looks okay. So if the long-term investor, it's fine. He can look for targets closer to, I would say, 30, 33, 34 types of levels, he can continue to hold.
Okay, that's an hold coming in on Trident. But Shahina, do you track Geojit Financials? Actually, Debashish Das is holding 1,000 shares from a price of 44 rupees since 2018. And as you can see on the screen, it's almost no profit for him since then. Any advice on this one?
I would recommend that he books his losses and exits.
Okay, this one is coming from Anup and he's bought a Gland Pharma at 3,400 rupees per share. Kunal, he bought this for short-term gains. Now what should he do? Continue to hold on to this one because clearly it's not made any gains for him. In fact, it's actually halved from the levels that he's purchased it at.
Yeah, I think the stock has corrected significantly from 4,200 to 1,100 levels. The reduction is more than 50%. In fact, it's more than 70% for the stock price from those life highs for Gland Pharma, and that's a clear sign of weakness for the stock price. Even in the recent charts, there have been some attempts for the stock to make a comeback, but then it's unable to find any major buyers. So I think it's best that you avoid the stock. If you've bought at 1,200 levels, you may wait for me another couple of days for the stock to come back towards 1,200 mark. But I think that's a good zone where you should look to exit rather than build up positions.
Okay, Shaina, the next question is specifically for you. Vivek wants to know your view on Home First Finance. He is holding shares at a price of 760 rupees. He can still hold this counter for the next 6 months since he's sitting at a loss right now.
Well, I think it's going to be very difficult for him to recover his losses. So I would actually advise that he exits. It's a small cap stock, and I think the sector is facing higher costs in terms of higher interest rates. So he should exit.
This one is coming in from a viewer from Mumbai whose surname is D'Souza. That is my namesake, must say. But this one is on Samil, purchased at around 71 rupees per share. Kunal, the viewer has missed out on selling this counter. What should he do right now, he or she do right now? Should average right now or just hold on to Samil?
See, I would suggest to hold on. As of now, the stock has fallen very sharply. In fact, on the daily charts, it had formed a rising wedge pattern when the stock had broken below the 80 levels, I think a week back. So that was a point where we generally try to be a bit more cautious because we expect that a near-term correction or a sharper correction could be somewhere in the near term. So that has happened for Samvadna Madhasan. I would believe now at current levels you can just look to hold on because the stock has retraced this entire pattern of bearish wedge. So maybe over the next couple of weeks you can expect a gradual recovery, but it's a stock which I believe should be just best kept for short-term trading rather than any kind of investing.
Okay, Shahina, coming to you for the next one. Shailesh is holding 30 shares of Rolex rings from a price of 1,770 rupees. The good part is he's sitting at a profit, but he's looking to add more for the long term. Any advice on this?
I'm sorry, I don't track it.
Okay, Kunal, would you be able to help him on this?
Not really, don't track it.
Okay, so no advice. Cheryl, would you like to take the next one?
Yeah, this one is coming from Shashwat. He's writing to us from Delhi. Kunal, this one is for you. Holding 100 shares of First Source at a price of 41 rupees per share. Wants to know whether he should go ahead and buy some more of this counter or look to book profits at current price. No doubt the stock has risen quite high, had surpassed the 200 rupees mark. Now it's sub those levels, but he's still making good profits.
Yeah, I think you're making good profits and I don't see any reason why you should look to exit. Maybe it's a phase for the markets where these mid-cap IT names are going through a correction. I'm not sure that what exactly would be the time period when these stocks would bottom out. But whenever it does, I believe stocks like First Source, Redington, something which we discussed earlier, these stocks can make a strong comeback for themselves. So since your buy price is significantly lower, I don't see any reason why you should look to exit this in a hurry.
Okay, moving on to the next one. The question is from Bhardwaj Shahina. He is holding 550 shares of IOC at an average price of 71 rupees. Can he add more in this particular counter since all these OMCs are now seen to be buzzing? And what will be your advice for the long term?
Well, for the shorter term, yes, the stock looks like it can give a nice bounce. But at the same time, for a long-term investor, I think investing in OMCs, especially with elections coming down the line, they will not be able to pass on any increase in crude oil prices if at all it happens. As of now, that's not the case. So these stocks are showing a bounce. Short term, invest, take your profits, and move out.
Okay, this next one is coming from Subrata Mukherjee. He's writing to us from Kolkata. Polyplex Corporation, he wants to know whether it's good for the long term. And you know, Shaina, you won't believe it, but we've had day in and day out multiple queries coming in on this particular counter. In fact, I'm intrigued to know why so much interest coming in this one, be it for short term or the long term. How does this company look to you on the fundamentals? Does it warrant such an attraction?
Well, it's in packaging. It's in packaging films, and but I really wouldn't invest in it currently. For the shorter term or even for the medium term, the numbers in the last quarter were extremely disappointing. They showed a pressure on raw material costs, and the profits had come down substantially. So I would avoid at current levels.
Okay, moving on to the next one. And Kunal, the questions are from the sectors which you have been tracking recently. The first one is a PSU banking name, that is BOB. Carol is holding shares of this counter from a price of 104. And the next counter that he has is Sun Pharma. He added this at a price of 750 rupees. So he wants to know, is this a good time to book profit in both of these and enter again at the lower levels? What will be your advice?
See, I think it's possible that Bank of Baroda, and I think I mentioned this earlier as well, that these stocks can go through a phase of correction for themselves over the near term. But then since your buy price is significantly lower, I don't see any major reasons why you should be looking to tinker with your holdings, because when these stocks get into a recovery phase, when the recovery starts off for the PSU banking stocks like what we saw in the second half of 2022, it's going to be very difficult to try and catch back into these strong rally phase for the stocks. So it's always best to try and wait out for long-term play. Yes, these stocks have given you fabulous returns, but I would still believe that good times could still lay ahead, possibly in the next 1 to 2 years, or once we are past this corrective phase for the market. So I think you should hold on to it from a long-term play, even from current levels.
Okay, this one is from Chandrasekharan. He's writing to us from Chennai. He's asked me like multiple query, but I'll take the latest one that he's asked about. And he has Thomas Cook 3,000 shares. He wants to exit this counter and look to buy Indian hotels. He wants to know if that strategy makes sense for him to actually make the switch. He's not mentioned the buy price for Thomas Cook. However, Kunal, do you think it makes sense to switch out of Thomas Cook, look at Indian hotels or even Lemon Tree for the matter of fact?
Yeah, I'm not sure switching out of Thomas Cook, because the stock has been very sideways. I think from the 2022 lows, the stock has also done quite okay for itself, rallying up to 58 plus levels where it's trading right now. Yes, the last 1 or 2 months, even this stock has corrected, like most of the other names. Even Indian Hotels, for example, has corrected from 360 to I think 300, 314, the last I had seen on the stock price. So most of these stocks have corrected more than 20% in the last 3-4 months. But then I think this is at par with the overall market performance. I don't see any reason why to exit Thomas Cook and add on to these names. Yes, you can add on to them individually, Indian Hotels, etc. But I'm not sure exiting one stock and then buying onto this similar kind of a theme would make sense.
Okay, Kunal, once again coming to you. Gaurav is holding shares of ACE, 1000 shares, and the price is like just 11 rupees. I believe that it's almost a decade long investment for him, and it's been a multi-bagger for him, of course. He wants to know your view in this particular counter, and he can still hold this for the next 6 months. So what will be your advice?
Yeah, I think you can continue to hold on. I don't see, again, no rush or no reason for you to exit. It's done reasonably well. Has been one of the few stocks which has managed to stood the major part of market volatility in 2020, 2021, 22, and so far as well. So I believe in that regards, it's a stock which is extremely strong and resilient and has a very decent chart structure. Ideally, you should hold on to these names.
Okay, this one is coming from Kabir Bedi, and it is not the actor Kabir Bedi. He's writing to us from Punjab. He's saying that he's purchased 200 shares of Prestige Estates Kunal at a price of 435 rupees per share a month ago. He wants to know medium-term horizon, how the counter looks. His medium term is 3 to 6 months.
Well, it looks attractive. In fact, most of these real estate stocks are actually making a good comeback for themselves, be it DLF, be it the likes of Lotha developers, which had also done reasonably well in the last, I think, 1 month or so. These stocks are making a comeback for themselves. So if I put in a similar prospect for a stock like Prestige, then I would believe that the stock can make a comeback towards at least 455, 475 over the near term. So a 10%, a product 10% target, which is what I would assign from current levels, at least for these kind of names.
Okay, let me carry this theme ahead. Not a real estate company, but a multiplex company. And Shahina, actually, Akshat is holding shares of Phoenix Mills. He bought the 2,000 shares back in 2020 from a price of 711 rupees. Currently at a profit, so he wants to know, is that a sell at these levels or he can still hold for the long term?
Well, I think he can hold it for the long term. The stock can rebound to levels of 1,500, so he can hold it.
All right, this next one is coming in from Subramanian. He's writing to us from Chennai and he's asking about IndusInd Bank, Kunal. He wants to invest in this particular counter and what is the best price?
Well, it's already 1,000 rupees. I think if I'm not wrong, it's come back towards the previous low the stock had hit in the month of February start. So price-wise, it's at a very strong support levels. But as I've been advising earlier, that rather than just buying the stock because it's at a strong support levels in this kind of a market, it makes sense to buy these stocks on confirmation of a breakout. So I would suggest that you buy the stock maybe another 5-6% higher. 1,050, 1,060 could be a level. So even in case if the stock recovers and rallies up, then we can establish that 1,000 is a strong support and that's a stop loss for your trade. So at current levels, it may look very attractive, but the stocks or rather the market is such fragile that such a smaller correction into the markets can lead into a breakdown of such kind of chart structure. So I would suggest about IndusInd Bank only about 1,050 mark.
Okay, Shahina, once again coming to you, Avinash is looking for your view on CDSL. Is that a buy at current market price, and the stock has corrected more than 40% from its all-time high levels?
Yeah, I think in line with the overall market, the stock has corrected. But at current levels, I would think if you're a long-term investor, it's a strong fundamental stock to hold for the long term. It could be a portfolio stock, so one can continue holding. And yeah, you can keep stop loss if you're very concerned, close to about 870, 900 type of levels, but continue to hold long term.
All right, so that's the take coming in on CDSL. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let me continue taking all of your stock-related queries. This one is coming from Rupert. He's writing to us from Bangalore, and he's looking to buy Atul Auto, but he wants to know whether it makes sense to go ahead and purchase this particular counter. What's your take on this one, Shahina? Atul Auto, do you think it's a good bet? Do you already have the stock actually run up on back of the fact that there was a prominent investor who has actually bought some shares of this company?
Yeah, I think you can continue. You can buy. You can buy at current levels also. I feel, and I think a target of 400 could be on the cards. I think the overall segment is looking up now. Three wheelers has started to look up.
Okay, Shaina, once again coming to you, Shubhendu Kumar Chaudhary is holding 200 shares of TVZ at a price of 73 rupees. He can still hold this counter for the next 1 year since he's sitting at a loss. Your view?
I think it's better to exit this counter and preferably get into something like a Titan for the longer term.
This one is coming from one of our viewers who's just written to me, and this one is from Ram, I believe. He's asking about Cochin Shipyard. Kunal, 600 shares, but he is suffering about 25% loss in his holding. He bought it, I think, at an average price of around 650 rupees per share. What should he do with this counter right now?
Well, I think you should hold on because the stock has just retraced right now 61.8% from the lows of 2022 when it was almost at 275, 300 rupees. So from that rally towards 650 and now the correction towards 460, the stock has just retraced 61.8%, which means a major part of the correction seems to be behind the stock price. It may go into a time-wise correction, but I think at current levels, it makes good sense to hold on.
Okay, Shahina, the next question is for you. Vivek is looking for an advice on Tip Industries. He's sitting at a loss in this particular counter. He bought this counter at a price of 1,730 rupees. How are the fundamentals looking to you as he can still hold for the next 1 to 2 years?
Well, I think for it's better to exit this stock. It's a small cap. The market cap is hardly 2,000 crores. I would exit.
Okay, this next one is coming from Shrikant. He's writing to us from Hyderabad. He has 100 shares of HDFC Life purchased at 514 rupees per share. Kunal, what should he do with this particular counter?
Well, as of now, it's a hold, but then I think on rallies, maybe closer to 485, 495. This was the point I think the stock had hit last week as well, if I'm not wrong. So that's a zone where I think you should look to exit.
Okay, Shahina, there are two queries from Parvinder. He is holding shares of CMS Info, 25 shares at a price of 302. And the other counter he has is La Opala, 40 shares at a price of 392 rupees. Both of these counters are like 6 months old investments, but he can still hold for the next 6 to 8 months in both of these. Any advice on both of these counters?
Yeah, I think you can see a bit of weakness in the shorter term, continuing to lose a bit of more money, but could stabilize at slightly lower levels. So I would continue holding both of them.
All right, this one is coming from, okay, with that actually we'll kickstart with the rapid fire then. And Kunal, we did speak about Prestige Estates earlier on, but Karthik Raja wants to know if it's good time to buy given the fact the stock is even run up right now.
Yeah, I think it's a good time to buy the stock.
Okay, Shaina Chandrasekharan wants to know between IRFC and REC, which one is the better bet for long term?
REC would be a better bet for the longer term.
Okay, this one is from CA Akshat. He's looking to buy Home First Finance. Or rather, he's already bought Home First Finance in IPO time. Can he add some more at these levels, Kunal?
Well, I would not suggest an average amount.
Okay, a viewer hasn't shared his name, but he has bought 25 shares of Infosys Kunal at a price of 1,482 rupees. Should he sell or hold on to this counter?
Hold on to it as of now.
Okay, this one is coming in from Ram. BCG is a counter 40% losses. Brightcom Group, that is. Kunal, what's your take on this one? What should he do?
Exit on rallies.
Okay, Kunal Tripta is holding shares of Paras Defense. Beg your pardon, she's holding shares of Apple India, 265 shares at a price of 1,180 rupees. Your view?
Hold and look to add at closer to 900.
Okay, this one is from Sunil. Kunal. IOC, one lot he has at the price of around 81.6 rupees per share. Wants to know what should he do.
Don't expect too much of targets. I think 82.5, 83 could be a target where you should look to book out profits.
Okay, Shahina Ragvi wants to know view on KPIT. She is holding 50 shares at a price of 450 rupees.
I mean, with good profits, continue to hold even now.
Kunal, Daulat Bhasha wants to know about IT sector. Can he look at IT sector right now, especially Infosys?
Yeah, specifically large cap names. Tech Mahindra should be the first bet and then followed by HCL Tech, Infosys and TCS.
Okay, Kunal Gautam wants to know a good entry price for Greaves Cotton.
Well, I think maybe at levels of 125, 120, 130 zone is where the stock is trading. That's a good zone to buy.
Okay, this one is from one of our viewers who's bought Laurus Labs at 317 rupees per share. Shaina should hold or add some more or look to exit?
I would say exit.
Okay, but with this, viewers, it's time to wrap this edition of Rapid Fire as well as Buy Now Sell Now show for today. Shahina and Kunal, thank you so much for joining us today on ET Now and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put this show together. But don't go anywhere. The market action continues, and markets at noon will be taking the action ahead right after this quick break. Stay tuned.